Hang on a second. There we go.
All right.
Cool.
I see it now.
All right. Welcome, everybody. All right. Welcome to Trade of the Week. Thanks last week for Andy for filling in for me. And he's
You're
here
welcome.
again. And Andy will help us out and chime in where needed. So let's get started. The old disclaimer reminds everybody that we're a software as a subscription service company, and we're not registered investment advisors, we're not brokers, we're not money managers. So anything you see or hear today from us is just our opinions, personal opinions, and not to be construed as any kind of advice. So got that under wraps. The old "you're not alone with trade ideas" slide reminds us that we've been here for almost 15 years now, and there's many layers to the program, and Andy and I have pretty much been there since the beginning. And we know that for newer traders and newer users, it's not something that comes quickly in the first couple of days. Not to say it's not an intuitive program. What I'm saying is there are many layers to it. There are many tools. There are many functions. There are many Easter eggs within the program that we're here to try and show you, and it's not really something you can get quickly over just a couple of days. So we do our best to try and make available, starting with Barry's live trading room. Hundreds of people show up each week and rival many of the other paid subscriber rooms. Barry does a great job. Andy and I used to do that, and it's not easy to babysit an audience all day long and still try and work your own account. So that is available, and Barry is very generous with his time. People show up and ask questions on the product all the time, so that's the point. The product is available to discuss in Barry's room if you have questions. We have the afternoon webinars, such as now. I helped Jamie yesterday, and Jamie will help Andy on Thursday. I believe we might have a guest webinar tomorrow. I'm not sure, but typically we have the afternoon webinars at this time of day, Monday through Thursday. However, Friday, we have what's called a support session, which is 11 to 2 Eastern during the market, where we just open up the doors and people come in and ask questions, whether it's trade ideas related or market related or scam related, or try to back into a better way to configure. We're there to help every Friday. So if you haven't been to those are another great way to get up to speed on using trade ideas as quickly as possible and shorten your learning curve. And then lastly, we do have this Trade Ideas University. All 4 parts are actually recorded, but we do still show up during the trading day and go through some content and answer people's questions. It's really the best thing to do if you're a new subscriber. It resets every Monday, so just show up, start on Monday, get the beginners courses going, and then sometimes the attendance will tape off towards the end of the week as people get what they need, or maybe they're watching the videos, but we're there regardless, live for you guys. So that brings us to this week. As always, it's the theme of man and machine combined. There's really nothing out there that we can just turn our back on and flip a switch as a machine and make it work for us. We're still going to need the discretionary human touch, which is actually the supervisor of the machine. The machines are not going to supervise us. I know Elon Musk thinks that, and some people think that, but we are always, in my opinion, going to be supervising the machines. And hopefully that doesn't get away from us. So by doing so, the machines and the humans work well together. They combine and bring and curate the best of the best data to the top and help us make excellent decisions, whereas in the past we were just lost in a sea of data before AI and before even the custom features of trade ideas, and just the simple filters of letting only the things come through that we want to see is an early element of AI and technology as we go forward. So that's the world we're going to be working into. So the format, as usual, market recap. I got a lot to say. It's been a couple weeks, and we'll talk about market recap. Holly was a rather quiet day, nothing really going on over there, but Andy might have a couple of thoughts, but nothing big. We'll move into the trade of the week. I have a lot of thoughts of the trade of the week, and we had a very interesting example of what we've talked about. It's a 3-candle setup. It's called the Go Pause Go. I'll talk more about that. And then I have a few ideas. Maybe we'll set some alerts, both some longs and some shorts at the end of the day. So we'll go ahead and close that and get right into it. I'm going to bring up the S&P, and I know a lot of you guys are also showing up at Jamie's webinar yesterday. So what I have to say is not really much change from yesterday. If anything, it's maybe a bit more confirmed. And that is as we recall, the doldrums of the summer back month here in this circle, we talked about we could just grind higher. There's really no bear case in sight. But all of that changed right here in these 2 days, where we broke those moving averages, and more importantly, held this orange line, which was the pivot line going way back, and breaking that pivot line and then closing below that pivot line. Really, this was the 3-day event right there that really changed everything, and we haven't really recovered since then. The price action is no longer small red and green candles. It's turned into maybe people over 45 out there remember that board game called Chutes and Ladders, where you had red slides and green ladders. And that's what this market starts to look like when we get into full-on volatility mode, which is what we are in right now. Full-on volatility mode, which means you're welcome to downsize your average share size position. If you're a trader, swing trader, doesn't matter. You're going to get a lot of movement. You're going to get a lot of gaps. You're going to get a lot of surprises up and down overnight. So you really have to respect this environment. This is like North Shore big Wednesday waves right here. Only the big, strong swimmers should be out there swimming. But beneath all that, we still see some issues here, and the issues are not looking that great for the bulls. The only thing that could persuade me that the bulls can get back in charge here would be a nice closing candle back above the 50-day moving average and our pivot line here that is so important. But that doesn't really seem to be anywhere close to where we are, because what has happened? Well, we had a cross of the 20 below the 50, and more importantly, that 20 period has been dictating price action, except for this day right there, for the most part. The bodies of the candles and the wicks and the closes, they're all beneath this declining average. And this is starting to really pick up momentum, in my opinion. We could get back down tomorrow and trade back up with a green candle and still be under this at the end of the day tomorrow. I don't know, it's a scenario. But this is what I'm seeing, and it's starting to feel like that. We drop a ball from the second story and watch the ball kind of bounce with less and less amplitude each time, and before you know it, it's looking for the crack in the ice down here. So that's where we are right now. As I had said in the past, there's no bear case to be made. Well, now I'm saying there's a pretty good bear case to be made, and it's being predicated and dictated by the declining 20 period, essentially keeping a lid on the price action of our most beloved SPY, S&P 500, the most diverse. So that's what I'm seeing over there. We look at the NASDAQ in the form of the Qs. We're kind of seeing the same thing, a failure or a real inability since this day here to get back above and close above the 50-day moving average. So the 50-day moving average is very much in play here in the NASDAQ. And then there's the 20 period close. Well, the body of 2 days ago closed below the 20, yesterday way below, and again today. So the same kind of technical respective action is happening over here in the Qs that was happening in the S&P, and it's not exactly good for the bulls. This was good for the bulls. The moving average is holding the price action, like a bird in the hand. But now we're on the opposite side of the mountain here. The price action is holding down the price. And that's really as simple as you can make it in my book in terms of determining who's in charge. Back here, the bulls were in charge. Back here, the bears are in charge over here. So it's really a tale of two markets really quickly that we're looking at here at this point in time. Interestingly enough, I noticed yesterday in talking to Jamie's webinar, if we go to the diamonds, the Dow, there's some support action happening, but we'll get to that in a second. Same thing happening over here. The 20 period has something to say with the price action in the last 3 days. Also had that crossover, not looking that great. But on the support side of things, that bouncing ball seems to be bouncing on the 200-day moving average. So what I mentioned is, the Dow can be a very simple decision point for big money managers out there. It's the oldest index we have. And if you'll notice, we have not really had, except for this one anomaly right here, we've shaped right back up, and we closed below the 200 this one day, and that one day only. Ever since then, the price has been repelled. We have bottoming wicks, and the price action, the buyers are showing up down here in the Dow. So if we all of a sudden see another attempt at a red candle close here, below this 200-day moving average, this will get my attention very quickly, and it might get the attention of a lot of money managers and other stuff going on out there. The market is run by quants and algos, and if then the Dow closes below the 200 moving average, then it could start to trigger a lot of stuff. So yeah, so let's take a look at the Jeff, the interpretation of the IWM. So I was saving that one for last, Jeff, because it's always the ugliest of the four. And as we've seen before, the IWM wanted nothing to do with its one attempt right here to try and get back into bull territory up here, and it failed miserably, dropped down, and now we are just way below all of our moving averages. We're not even near the 20 period as we are respectively in the others. We're now flirting down here with the fast line, the momentum line, the 10 period. So if the market starts to turn sour, more often than not, yeah, they're going to start ditching the ugly ones and the small cap guys first, looking at the portfolios and trimming the weeds. And I think we could all guess, if we had to look at big time portfolios, where the weeds in some of those portfolios might lie, and that's the S&P, that's the small caps, Russell 2000, IWM. They just have not been performing over the last 3 months, and now they're really teetering here. I mean, this is really precarious. So not only will I be watching the Dow, let's keep an eye on the IWM tomorrow. If this thing starts to sell off and drag small cap land with it as people try to pull the weeds from their proverbial gardens and their positions, the rest of the market could pay attention. It's happened before. You know, the one type of market can drag the other markets around. We'll get to where the strength is. I mean, that's coming up in the trade of the week. We talked about it, gold and silver. Silver even more so. Silver's playing catch up now. Sometimes it's referred to as the poor man's gold. But as I was mentioning to Andy earlier, this is not just a bell-to-bell event. This is a global event. This is happening overnight. I mean, all this space here in silver didn't happen during our market hours. It happened as Europe was buying and China was buying. So it's an interesting sector right now, which is the only sector, and the more that people rush to flight to quality on these things in gold and silver, the more it tells us it's quite possible we may start to get a failure here, and the IWM might actually be a omen and a precursor to what is coming. I wouldn't feel good if I was really bullish right now and you were loaded to the gill and you're hoping for higher prices. You need to maybe even consider buying a big chunk of SDSs to ride out the storm. And if we do get a tremendous downdraft in price, these SDSs will cushion the blow of anybody's portfolio. That's called hedging. You can do that. So that's an option. All right, so that's all I've got really for this segment here on the market recap, unless Andy wants to add something. We're going to come back and talk about the gold and silver in a bit.
No, I agree with you, Steve. And you know, we mentioned back when the market was all-time highs how the IWM, it was one or two things were going to happen. The IWM is going to play catch up quick, or the major averages are probably going to fail and end up being the latter. Plus, you know, I kind of been pounding the table. I've never have liked over the last almost seems like couple of years, you know, every time we go to all-time highs, I know you hear the talking heads, all-time highs, we just don't do it with any umph, you know, it just happens, and it seems like 3 days later we're back down below the all-time high. And been seeing that a while, you know, with the spiders and the Qs. It just not what you are accustomed to when you break out, and some of them some really nice technical breakout that you would think you would get some, you know, momentum behind it, and just wasn't there, you know. And same thing with a lot of stocks. They go to all-time highs and they just get met with a bunch of selling.
Kind of reminds me of the four of us, the family, went to Breckenridge in one day from sea level up to over 10,000 feet. We're walking around at 2 in the morning like zombies, because we can't get any air up there. It's kind of like the market. Can't get any air up there at highs.
Yeah,
and
exactly.
Doesn't know what to do with itself.
All right, so, Steve, but you covered it well. That's about all. I will talk briefly on Holly. Not a lot to talk about, but I will do my best.
All right. Yeah, quick tip. If you go from sea level to 10,000 feet, buy a can of oxygen and some Ambien.
Yeah. All right. Well, first of all, let's obviously look at the market. Look what Holly had to work with today. And, you know, I'd like to go into the last couple of days, because remember, guys, a lot of these strategies are built on daily patterns. So basically, you had yesterday a nice little gap up and closing on highs. And then what we have today, we have a gap up above the 10-period moving average, pretty much right at the 20. So this probably set up a lot of long strategies, just the nature of the market. You know, we're still technically in a bull market, and you had a nice bounce yesterday and then a gap up today, and it probably said, you could see by the longs that went off this morning, it probably, like I said, set up a lot of long strategies to trigger if the certain filters, you know, and everything were met. And as I look through some of these, I see some pretty decent, you know, WB, one of the first ones that fired off this morning after the first hour. Not a bad looking chart here. You had a nice big move after earnings, several dojis as the market was selling off, and then you got above this yesterday's high. Boy, that seems like a pretty decent trade alongside, and look at that, just got clobbered, you know, along with many other stocks that had the same sort of pattern. So when you see these setups developing, okay, Holly, I mean, you know, I would take this trade almost, you know, 9 times out of 10. Well, let's see what the market's doing. If the market's getting killed, probably not, but nice setup, okay? Didn't work. So I just want to show you, and there's several more in there that look like this, and it just makes it tough, all right? This market, once again, going back to the spiders and what Steve was talking about, the chutes and ladders. Guys, I can promise you this, any strategy right now is struggling and having a hard time, and Holly's not going to be any different. That being said, you can see here with the trades, 4 trades in Holly Grail down $62. This is based on 100 shares per trade. 10 and Holly 2.0 just down $47. Holly Neo down $18. So made some money and lost some money. You can see in risk off here, not really what I like seeing. You actually had more reds than you had greens, but nothing major in risk off mode. And looking at today's action, this was definitely a risk off mode, especially with the longs. A couple of trades. I mean, this AVDL had a nice 7% gainer before she exited, but look here, you had to exit quick. Here's the buy on a pullback there, and look at this. She got out right in time, and then big drop. Not uncommon in today's market to see this kind of, you know, action. A strong stock, all of a sudden you see a big, you know, 5% drop in one candle. It's a dangerous market, guys. So just be careful. Whether you're trading Holly, your own stuff, you know, this is the kind of market. Not to mention it's historically for me and many of the traders that I know, this is historically the most difficult time to trade, is the last 2 weeks in August, and then really after, and maybe until about after the week of Labor Day, it can be really difficult. So because usually the volumes are down, the participants are away taking last minute vacations. So Holly, not bad today, just nothing really to write, and there's nothing there, just a small, you know, small losers and a few small winners. So Steve, I'm not gonna elaborate too much.
You're
more.
right. It's not even so much a U.S. thing. It's more even a European. The Europeans take the month of August off, a lot of them.
Mm-hmm.
So it's a global slowdown of participation. And then even though Labor Day comes back, 4-day week next week, people still kind of rubbing their eyes and sharpening their pencils. And then in second week of September, things can start to get interesting. But not to say things haven't been interesting here so far. So, all right, back to my screen here.
Yep, back to you, Stevie.
All right, so the trade of the week. Let me pull up content. You know, as the market went out a week on Friday again, you know, we just noticed that the observation that when things, you know, start to lose an appetite for stocks, they start looking for other asset classes, and you know, gold and silver have really just been unstoppable, and those charts have shown us reason to be unstoppable. I mean, just for the moment, here's Newmont. I just happen to have it up. I mean, guys, look at this. This was just, that was about as juicy as it gets right there. Nice little beautiful wedge on a stock that's been trending higher in a beautiful set. The way it's going to resolve is usually like it did. Easy in hindsight to say, but try and catch some of these patterns when the rest of the market's looking like crap, and you start to see stocks like silver and gold and PASS, you know, again, you know, had a really nice another wedge breaking out of that one. It's just, it's been unstoppable in this particular market sectors. So pause has been a great stock, but we didn't call it on the trade of the week. It actually was right there, almost breaking out on Friday. A smaller cap, smaller name stock, smaller price stock had not quite broken out on Friday. We've been watching that one as well. Had a really nice push off of lows, a nice little 3-day set here right into the moving averages, and kind of like Newmont did when I first showed you. I wasn't surprised to see that big move on Friday. So we were looking for basically follow through to new highs on the trade of the week, and it didn't. Actually triggered right on the open yesterday, made it a little difficult, and then pulled back and gave us a narrow range, which we're going to talk a little bit about after the trade of the week, this pattern setup here. Excuse me, there's a couple of really good examples. But as I mentioned, this is basically tracking silver, the commodity. This is a mining stock, just like Newmont and Pan American Silver and Royal Gold and some of the other precious metal miners out there. It's not really a bell-to-bell trade, you know. We're kind of trusting a little bit some overnight movement in the market. Excuse me, and AG would have been nice to get the 8% move that Pan American Silver got today, but the good news is this is still the same sector, and we may see a little catch up tomorrow in AG, looking at PAAS and the day it had today and thinking, well, why can't we do that as well? A quick look down here at our single stock window, the stock composite rating is at 85, so nothing really to fear in terms of bad fundamentals possibly under there, because those are calculated in the score as well. So this AG might be a slow, narrow range creeper that requires, you know, some gap ups along the way as Europe and China open up later this evening, and pay attention to this commodity as well. Other than that, I mean, you know, the downside risk is, I believe, is going to be the bottom of this day right here. This is when it's having its day. We'll call this the go day, and yesterday was the pause day. Would have been nice to see a bit more go today, but I've got some examples for you. Maybe we'll play some catch up tomorrow. But in terms of those that are wondering where the risk is, I would not want to see this trade come back, and now it's below this green candle and it's below these rising moving averages. By tomorrow, these moving averages will be rising above that orange line. That would be roughly the area I don't want to see it lose. And then again, our trigger area was roughly a high of 1112. Mark that up right there. So, you know, here's our risk area. So if we look at it in terms of where it is, you know, it's in the happy zone. It's above the orange line. It's above our entry point. But again, silver miners had a great day, especially PAAS. It'd be nice to see some follow through tomorrow in AG. We shall see. Don't be afraid of the market on this one. If the market does roll over and get a little red and scary tomorrow, this is the kind of place where flight to quality is going to go. They're going to go to treasuries. They're going to go to gold. They're going to go to silver. And, you know, just looking at gold and silver, like I said earlier, there's the gold chart in the last 3 days. Pay attention to silver is really extending its lead. So all of the momentum is with silver right now. And I'd rather be in a silver stock than a gold stock. But we will see, you know, where we can go. The upside, I think, of AG, all we can do on these particular instances is pull back and go to a weekly. And then let's see. Okay, so it looks like, wow, we're clearing a lot of very interesting levels here. Very interesting levels. So we're definitely breaking out of this is a 2-year range, 2.5-year range, guys. There could be a lot of meat on this bone. So I don't see any reason why we maybe can't get up to, I'm seeing some congestion like right here. You know, I'm just eyeballing this, but, you know, something like the round number of maybe 13 and a quarter. I think the 13 is what the target says in the range. But boy, when you do this exercise sometimes and zoom out, here's our little risk band right here, translated. But boy, anybody paying attention here, looking for some value possibly in silver, and they're going to see this. So this is a very significant breakout that we have here on this weekly chart. Let's go back to the daily chart. And that's really all I've got to say on the AG. There was just nothing setting up in the regular stock land. All the volatility was over there. All the pretty charts were over here. The charts going from lower left to upper right. Look at the volume too as the interest starts to come in. The word's getting out here that this asset might be in play. So we just want to play the trend lines. We want to look for pullbacks to buy, you know, consolidations to break out of and participate in, and that's it. Suggested stop, yeah, 10.25. Suggested, oh, 15. Okay, so I had it much higher at 15. I was being very, very shy there at 13. Thank you, Eric. Yes, EGO is another good one, Mike. I haven't looked at that for a moment. Let's take a look at that. And we're going to segue into the next segment here. So EGO has given us a great go, pause, go. But the best go, pause, go, and by the way, I think if you look it up in the books, they call it a thrust, pause, thrust. And for some reason, I have a hard time saying that, so I renamed it go, pause, go. And GDX, the gold miner, is giving us about as perfect of an example as a go, pause, go can give us. And I'm going to reset these as an example. So this looks a lot like that AG trade. Remember, we had a little kind of a little reset right into the pocket here, like a little bird sitting on your palm, ready to fly. I would consider this day one. I'll come back to that in a second. This is going to be go, pause, go day 2, and then obviously day 3 is the go day. But let's break this down. And this works with any type of price action, whether it's natural gas, oil, possibly treasury bonds. It's just a way in which the herd reacts to a big price move. You know, in golf they call this moving day. All right, this is moving day. Big green candle from top to bottom, closes on high. It's very important to close on high. Pretty much they got to close on high because we're going to look for some follow through momentum the next day. So speaking of that follow through momentum the next day, a lot of you guys have heard Andy and I talk about the day and a half rule. Well, as we look at here on the intraday chart, here was day 1, here's moving day, and then day 2. Well, let's cut the day in half. There's lunchtime, day and a half right there. What happens is all the momentum players here that rode this wave into the next day start to get a little nervous, and then a little profit taking coming into the halfway point. Well, where we go from there is where it can kind of get interesting. So let's do this. The way in which you can play a go, pause, go, because at the end of the day, when we look at that trade, what we see is this 2-part thing right here. And we don't know, is it going to be a go, a pause, and then a third day of go, like in hindsight, we did get today. But when we just roll this back a day, let's try this again. We just roll this back a tick, we don't know this. So let's keep it on this exposure right here. So what I'm going to do is I'm going to look at this candle, this doji of day 2, the pause day. We're going to right click and put in a markup. And then we're going to look at the bottom end of the doji, the day 2, and this becomes our signal range. This signal range can act one of 2 ways. Maybe you didn't participate in day 1 of go and you're watching day 2 of pause and trying to determine, well, if day 3 has a nice go, I want to participate in that. Maybe you're long this stock from day 1 and you're sitting patiently through day 2, and look at how these lines line up now here as we go to the intraday. There's the high and then the low. So day 2 sets our range. So day 3, all we have to do is pay attention to which direction do we gonna go. Now I'm not saying short it if this is day 3. I'm saying if you're long and it breaks that doji on the 3rd day, you probably want to get out and savor whatever profits you can muster that you got from day 1 because it might collapse on you. But day 2, if you're long and it breaks through the prior day, day 3, and it breaks through day 2's narrow range, then you have confidence to stay in your trade. It's still working. Or likewise, maybe you're a newcomer and you have confidence to come in and initiate a trade at that. So that's how Andy and I have always played the go, pause, go, when in fact we don't know what's going to happen here. So here's what the chart looks like. Moving day, big green candle, closes on highs. Day 2, follow through the morning and collapses into lunch and then finds its equilibrium and becomes a balanced doji day, a day where nobody wins, where it's going to have to go to the 3rd judge, like they say in boxing. It's going to go to the 3rd judge to see who wins, and we took out that line and there's your follow through. So anybody can participate on these types of trades. It doesn't matter if it's Cisco or if it's gold or if it's any type of price action. This is how price action behaves when you look at it on a daily chart, and then when you break it down here into the 15-minute time frame, you can kind of see decision is decision 1 or decision 2. It's as simple as that. We're just predicating and keying off the prior day, which is day 2, and that tells us if it is in fact going to turn to a go, pause, go. So the reason I brought that up is because we had some beautiful examples of that. I mean, let's look around. You know, RGLD. Didn't really give us a definitive go, pause, go there. pause did give us over in Silverland, pretty good, decent go pause go. We saw that already. Wheat and metal, beautiful. Look at wheat and metal, perfect. All right, we can draw those lines. If you were watching wheat and metal yesterday, there is our go pause go, and it told us definitively which direction it wanted to keep going. So did that make sense to the layman, you think, Andy, on the go pause go setup?
Absolutely. Yeah, you explained it very well. Yeah, I think Waleed says he has it. He says yes, sir. So does Mikey.
So the second day usually is going to be a doji, Waleed, and it's even funnier how, you know, that second day, if my example, it goes a day and a half. Any stock that has a moving day and follows through the next day, I get really, really nervous right around lunchtime, because that's about the time in which the first seller, the first buyers, the first wave, the short-term focused buyers, they're going to start to get nervous. They're going to want to book profits, because everybody's in this game to book profits. But it's the hardest game of all when you're a swing trader to sit through that first round of booking profits, having conviction, knowing that everything on the bigger picture is lining up. And that's honestly how I do feel about AG. I feel like we're going to hopefully have some more follow through. You know, if the market bounces tomorrow and we have a great trade deal with China and GDX falls out of bed, I can't make that assessment, but I don't know that to be the case until it happens. I'm not a fortune teller, but for now, I'd like to see a little more follow through on AG. That'd be nice. Now, let's say if it doesn't follow through, it's not the worst thing in the world. What's going to happen? These moving averages are going to start to come up and catch it. So maybe we get another 2 or 3 days of consolidation, and then Friday or Monday next week, AG gets its big move. But the point is, there's no reason to get out right now. We just got to let it work. It would have been nice to see it move as much as PAS pause did today.
Yeah, it would have. But, you know, once again, patience.
Patience. Swing trading is a game of patience, and you have to learn to trust that first wave of pullback. That was the hardest thing I had to learn in trying to make bigger money. Day trading is to sit through that first big pullback, or swing trading, I should say. All right, so let's clear that up.
One other thing, Steve, before you move on, because I know this was a trade of a week a while back. There's one stock on my composite rating that has a 100 score, and that's KL. And
the gold stock. We lost track of that one.
Yeah. Just looks like a lot of the others, but yeah, look at that score.
100. Yep. Can't do better than 100.
100.
Teacher's pet right there. A student taking advanced courses, getting college prep. So yeah, we lost track of KM. But boy, you know that Newmont the other day, and you and I were talking to in real time. I can't believe I passed on that, but
yep,
really worth imprinting on right there. And you've got a sector that's as hot as it is, and you start to see that pinching of the price action. You got to think that the resolution is going to be super strong when it does resolve itself. All right, so we're going to come into the last segment here, which is, we talked about go, pause, go, and again, it can be useful to a new trader to establish a new position on day 3, or it can be useful to somebody who's trying to stay in there. Most importantly, I think it's the most important part, is to try and get somebody to stay in there and have resolve, and don't get out until day 2 is broken on day 3. If that does happen, then you get out and you just take the best profit you can. But the point I'm bringing this up is, everybody in the books always say, but cut your losers quick and let your winners run. What I just demonstrated is probably one of the best solid ways to sit back and sit on your hands, and don't let yourself talk yourself out of it. Just keep it as simple as that. Did it break the low of that doji on day 2? Get out. Did it break the high of that doji on day 2? Congratulations, you passed the test. We're probably going higher, and you're going to be rewarded as a swing trader. So that's that. All right.
Ooh,
what?
You're gonna set alerts in this mess?
Well, you're going to see what I'm going to do here. Hold on a second.
Okay.
So, yeah, EYX is not bad. Is that on the? It's not a bad looking chart. I'm not going to set that one, Mike, but that's not a bad looking one at all.
It is on my composite rating. It just doesn't have a short float like you.
Right, like exactly. That's why if I took that short float off, it would come. But here's what I'm going to do. You know, we talked a lot about the bear case. The bull case is kind of under pressure. So I've only found a few stocks that look interesting compared to what the rest of the market's doing. And then we're going to look for a few shorts, and I'll show you how we're going to do that. And I didn't even pick, I picked the scan. I haven't picked the symbols yet, but the first three symbols I have picked, and it's from the A table, of course. This, Andy, does not seem to me to be an acquisition. It's a 3-day move up, and it's the tightest of all ranges, and it just doesn't want to go at the fast line. I don't know what this thing is. I am going to say it only traded 300,000 shares today, but it's kind of interesting. So I'm going to mark this thing up. I want to remind people, low volume, average. So it's not exactly a super liquid one, but it's super tight range. It's got my attention. The other one that's on here is is Wing. It's had a nice pullback. Look at these fanned out moving averages. I mean, I don't know what this thing does, but it sure is pretty. If the market does want to have a nice day and this thing wants to take out today's highs, I'd be interested.
Wing is a restaurant for buffalo wings.
Oh, is it? Okay. Yep. Football season.
Too.
Football season starting.
Yeah.
So I'm just kind of going back, looking at that wedge. If we break out, it's a nice running start to these. Maybe get some meat on that bone. And then lastly, MEDP on this one. Is it still on there? MEDP. Maybe a closed week. Why didn't that one? It's got to be on here. There it is, MEDP. Has a score of 89. And thank you, Waleed. It's just hanging out again. Yesterday and today kept closing above its 10-day moving average, above its 20 above the 50. I don't know what this thing does. MedSpace, scientific services. Okay. Earnings are not coming up. Earnings are behind us. There was our earnings play, and it's just been holding its earnings really well. So this thing's extremely relatively strong. I'm going to use the high of this candle right there. MEDP. Get my data back. All right, so high of 81.63. And that's it for the longs. Now we're going to do a little something fun for the shorts. We've done this before. We're going to do it again. We don't have a good market that's giving us a lot of opportunity for things that are pulling back to the 50 or pulling back to the 20. Watch this. I pull the scan up, and it's kind of empty. At least it was empty earlier. I'm surprised it's actually open now. But if I go in here and we flip it upside down, what do we get? We get a few more, and these are more interesting to me. So we did this about a month and a half ago, and we're going to do it again. We're looking for stocks that are bouncing up into their 20 period. Like this one looks kind of interesting. I'm going to come back to that. Boy, they looked really good about an hour ago before the close. I had a few more in there. That's what I get for doing it live.
You can go back into maybe an hour before the close if you want to see if there's anything in there.
Let's see what happened. Let's see what happened. Historical data today at 11:55. Flipped? No. Oh, I think I. Wait a minute. I totally messed it up. I'm going to reload my layout and try that again.
Oh no.
What? Oh no, what?
Your price alerts still going to be in there? Yeah, they will.
Yeah, they'll be in there.
Okay.
Mm-hmm.
That's right. You don't have to say the price alerts.
That's cloud. That's server side.
Right. Yep.
So earlier I came in and I looked at this, pull back above the 20, and there was nothing in there. Okay, so let me look at these. Yeah, these are all pullbacks. So wow, everything kind of changed on me. Jeez. Let's do this too. There was one more. I'm gonna try maybe pull back above the 50. Gosh, all these things filled in nicely because they were blank earlier in the day.
Huh.
We might just say forget it because I'm not going to force anything. Let's flip these and just see.
We'll flip them and go back in time. Okay, you got more in there now.
Yeah, that's true. I'm not really seeing the ones I wanted. Honestly, the ones I liked were on the 20. Let's flip this one more time. Now there seems to be more. Oh, that could be interesting. Yeah, I like this one. You're the low end of that candle. It just bounced up into its 50 and it seems like it's reversing. It seems like it's got a lot of air pockets down here and it wants to fall. So we'll go 46.20. Nailed it. That'll be a short, coated. That looks like a decent one. GLIBA, what is that? GCI Liberty. Doesn't matter. I like it. I'll go under here. Remind people these are shorts. There's that one. That's going to be the same as the other one. Same. I don't know what it is about that one. It's kind of funky.
It's not bad.
It's not bad, yeah. I'm gonna make this one right there. So we're just trying to mix it up a little bit, not to get too caught on one side or the other. You know, you'll have stuff going off, and you know, if the longs go off and the market's looking solid, then great. If the longs go off and the market's tanking, I'd be a little leery. But that's about all I've got there. That's all I could squeeze. That looked interesting to me. So I'm gonna put that back down and remind people that we have the price alerts that we can share. So there's only 6, 3 longs and 3 shorts. So I'll share these out as usual. We'll see. I'm going to edit this one so it reminds people short. And we'll share these out and catch up next week and see how they did.
No, you typed in edit.
That's what happens when you try and talk and type at the same time. We'll see, catch up next week and see how they did. But be careful out there because there's a lot of volatility still. And if you're super bullish, you got to check yourself a little bit because I think the market's definitely checking us.
Make
All
sure
right,
you hit
share.
Yeah.
6, copy the 6. I'll drop in the chat window here. Price alerts. Paste. Retail apparel, says Jeff. RTH is retail in general, but might have a better specific ETF for retail apparel, like limited brands or something like that. Hey, limited.
That's ugly.
Yeah, you're probably right, Jeff. Some ugly stuff out there. All right, well, that's all we've got for today. Finished a few minutes early, but said it could happen. So we'll bring in Scott to make a few announcements on the way out.
Yeah, thank you. A couple things on the way out. You can subscribe to our podcast. We should have some new episodes out soon now that summer is winding up and people are coming back from vacation. But do check out the archives. Just search for Trade Ideas Podcast wherever you listen to podcasts. Add us as a subscription. You'll get the new episodes as soon as they are available. We got a new ebook series. If you don't have it yet, get it. It's good. Both Steve and Andy contributed chapters. 3 books. Each book has 2 chapters. They're organized by subject. Go to trade-ideas.com/setup. The books also include some cloud links to some strategies that you can employ with these concepts. We have a discount code, Summer Heat, all caps. Saves 15% off the first month or year of any subscription or brokerage. Plus, those of you that are on standard can also use this code to upgrade. So keep that in mind, and if you decide you want to become a subscriber or upgrade to premium, there you go. Any questions, email us, info@trade-ideas.com. That's the best place to send all your questions. Very responsive. It goes directly into our help desk software, and you get a response from one of our team members pretty quickly. You can follow Steve on Twitter at TodayTrader, also at Trade Ideas, and at QuantBot, some other handles. Facebook.com/TradeIdeasPro is the page on Facebook to like and follow. We're going to have this recording up later on tonight or tomorrow and send you an email reminder with a link to the replay. Thanks, Steve. Thanks, Andy. Thanks, everyone. Have a good one.
See you next time.
Thanks, everybody. See you Thursday.